Vice President Kamala Harris accepted her party's nomination for president and gave her message to voters on the last night of the DNC. Joining us now is Hans Nichols, Axios political reporter. Hans, good morning to you. Anything in particular stand out? What do you think are kind of the implications, lasting reverberation? We're looking at poly market again. Just kind of get a sense of things. What would you say?
To me, the most interesting thing was how forward-looking the Harris speech was. Indeed, the entire week. You know, they gave a day to Joe Biden the first day, and that had a little bit of backward-looking. But for the most part, the Democratic Party is trying to reclaim the future. They're casting this all in the future tense, and that's really what they want to make this campaign, this argument about. You know, the interesting thing, guys, is that both of them, both the Trump and the Harris campaign, basically agree on a fundamental, and that is that the incumbent will lose. And this just turns the entire campaign into a battle on who is going to be the incumbent. And we're going to have sort of dueling versions of that for this, 84, 85-day sprint.
You know, I think that's probably true, although it does feel like there is no incumbent. I mean, she's done a lot to create that distance between herself and Biden, although then again, maybe not on the policy front. And maybe for a lot of people, that's the most important thing. It's a reminder of a lot of the things like the taxing unrealized capital gains that Biden might have thrown out there in recent years, but were glossed over. And now they're kind of coming back from the supposedly dead.
Yeah, well, they were glossed over in large part because when Biden threw out those proposals, the Senate was either controlled by Republicans or effectively controlled. You had a backstop with, say, Manchin or Sinema. The interesting thing about heading into 2024 is that, you know, Democrats, people should be very humble about their ability to predict. And, you know, the sort of conventional wisdom is that Republicans will win back the Senate. But if they don't and the Democrats take the House, they're going to have a blank slate to really entirely re-engineer the tax structure in this country. It's going to be an open bazaar. There's going to be a huge revenue need. They obviously want to do stuff on the raise taxes on the corporate side, the individual side for wealthier Americans. So yes, when Biden made these proposals, you know, the initial Build Back Better proposal in April of 2021 to pay for a $3 trillion proposal, it was given short shrift in part because the Senate was controlled by Republicans. We don't know who's going to control the Senate. So,
right.
I mean, I think there's probably going to be more scrutiny on that. And that's certainly what the Trump campaign wants to talk about. But, you know, don't look to the Harris campaign for a lot of specifics here in the coming, I guess I just say weeks, not months.
One of the sort of things I've been pondering as we wonder about the debt and deficit situation is that it's very much a Republican talking point that, that situation needs to be addressed. And so when you hear things like the corporate tax rate going higher and it talks about how much revenue that would raise and how on some level, if you want to raise the corporate tax rate, you can do so whether it has a budgetary impact or not. And it's weird, but I almost wonder if the right should stop trying to say, you know, that you need to do X or Y or Z to balance the budget and simply debate the issue on its merits. What should the corporate tax rate be? What is actually better at generating revenues? And same could go for any of these tax policies.
I mean, that's a very fair point. The problem with sort of what generates the most revenue and where you want to be on the Laffer curve becomes instantly political. And, the term that, you know, we reporters in Washington use, dynamic scoring on whether or not, you know, a tax cut is actually going to, if you actually lower the rate in some places, is going to increase overall revenues. Both sides sort of look for advantageous scores. So, I mean, it's a fair question. What should the optimal tax rate be? It just gets polluted with legitimate ideological concerns about where that number should be. Some Democrats
it's not just about the Laffer curve or how much revenue you raise. It's about whether companies expand domestically or whether they expand internationally. And there is a number where you're not going to build here. Maybe it's not 20. Maybe it's not where it is right now, 21. Maybe they'll still build here at 25. But there is a number where, and we had J&J. I mentioned Joe Woke a lot. They built an $8 billion facility here that would not have been built here at where maybe it would have been at 25. But, you know, Hans, I want zero. I don't know if you want to tax. I mean, it's de minimis, discretionary. You know, how much? It's 7% of what you raise total revenues, right? It's not going to solve anything. Increasing taxes on corporations, just a fairness issue.
Yeah, right. But eventually you get, 7% here, the old Washington joke, $1 trillion here, $1 trillion there. Pretty soon you're talking about real money. I take your
Unless
point.
you're spending, and then it doesn't matter.
Yeah,
then it's not real money.
Yeah, but if you want to have the spending conversation, which no one ever talks about, let's leave the sort of revenue side off the equation. Very few people talk about the mandatory non-discretionary spending. That's like 70% of the budget.
Right.
Oh, totally.
That's the elephant in the room.
And Trump has taken that off the books. Trump doesn't want to.
But what if the market has taken that off the books? Have any of us seen? I mean, you could argue maybe long-term rates are higher right now because of the situation, but it's an argument, and it's unclear if that's the case. And that's why I'm saying, what if the rate was just like, no, you don't have to raise the corporate tax rate to generate revenues? Like, you don't.
Yeah, I mean, it's like you hear that in pockets. I mean, to Joe's that you don't actually need to have higher rates for the revenue side. Trump. When we had the big debate in 2017, it wasn't preordained that the number would go to 21%, right, on the corporate tax rate. The business community actually said we're fine with 25. And then Trump's like, no, I want to bring it to 21. And I want to say it was the business roundtable was like, actually, we meant 21, right? So 25 doesn't seem like the business community will cry uncle on that. So, but to Joe's point, the back of the envelope calculation I use for every percentage point, it's about 100 billion over 10. So, that's how much you get in revenue. So, but again, like eventually markets in general are going to wonder how much money we're spending and how much we're raising. And you can't have these annual fiscal deficits out that long. And you guys, I hate to say this, and we're all tired because we went through a convention. But in January, we're going to have a debt ceiling conversation again, and that doesn't go away, and that's not fun. There's stories you like reporting about in Washington. Debt ceiling, I can confidently say, is not one.
What are they going to do if we got to go? But if it's a Democratic, through and through, what are they going to do? Do they have to do anything?
Oh yeah, they have to raise it. Yeah, they have to raise it. I mean, then we'll have extraordinary measures, and then they'll. Yeah. It's easier to do if the Democrats have run the tables because then they can just raise it and take the political hit. But you've got to do it. I mean, it's statutory.